Colleagues, good morning. Welcome here. Number one, welcome, and number two, thank you for attending. I think today's discussion, like last year, the idea is just to have a bit of a report back to the members of the pension fund regarding your pension fund, regarding our pension fund, new things that happens in pension fund environments, the trustees who are currently being the trustees of your fund, and just the results of the fund. Because I think it's important, you get your benefit statement, but it's sometimes just important to have a discussion and to understand a bit broader in terms of the pension fund, where we're going and that. I think just one or two remarks. I think it's important for us all to realize and understand that the pension fund is totally independent from the University of Johannesburg. You sometimes in the press hear about the risk of pension funds being taken and things like that. I think it's important to understand that our pension fund, be it the defined contribution or defined benefit fund, are independently from the university. It's an independent entity. It is managed independently. The only link between the university and the pension funds, if we look at the defined contribution one, it's literally just that the employer, therefore the university, has to contribute your portion and their portion to the pension fund. Now there's also rules and regulations in terms of that to make sure that we do it. So if we, for instance, universities do not transfer the money on a monthly basis, the Financial Services Board will be on our case. So that's the control that you have. That is an independent statutory body which then makes sure that we as employer follow the rules. In terms of the defined benefit, the link there is a bit better or more close, in the sense that the university has to transfer your monthly contributions, but also has a responsibility to make sure that the fund are fully funded. Now the majority of the staff will be in the defined contribution. It's a limited staff and defined benefit. But I think that's from my side, being the chair of the pension fund trustees. Just a few words to say, it is independent. We are doing really well. I always say it's hard, it's luck, but it's in a big way hard work, good investments, careful investments, which will make that your pension and our pension increases, and that we will have some safety net upon our retirement. I think I'll hand it over now to Yvette, who's, I think you all know, the principal officer of the pension fund. She looks after the legal side. She looks after your requirements. She's an employee of the pension fund. She's not a trustee, so we and yourself is effectively providing her tasks. And in terms of the Pension Fund Act, there's various things that a principal officer has to do. So she's your main contact and probably the most important person for you in terms of the pension fund. Yvette, over to you.
Thank you, Jaco, and thank you all of you who've taken the time to attend this session. As Jaco said, this is just a brief introduction of what the fund is about, but more importantly, it's a forum where you get to ask questions that's important to you. As Jaco said earlier, we're just going to look at who's the trustees looking after your fund. I'm going to give you a few administration statistics, such as the number of members we have on the fund. We're quickly going to look at your new benefit statements and the benefit summaries that you will be getting at the end of April. I'm going to give you feedback in terms of the fund's actuarial valuations, and then of course how our investments have been performing. Okay, now on the board behind me you'll see the list of the defined benefit pension fund trustees. We have Mr. Steve Rousseau, Mr. Francois Cooper, Mpho Letlapi, and Mr. Jaco van Schoor as the employer-appointed trustees to the fund. And then also the trustees that you have elected to represent yourselves, as Professor Basi van Solms, Dr. Shahid Nala, Professor Sonnekes, and Professor Herman Alberts, who's also representing the pensioners of the fund. In terms of the normal pension fund, the defined contribution pension fund, we have as employer-appointed Dr. Singh, Mr. Cooper, Professor Busenkwil, and also Jaco as the chairman. On the member-elected side, we have Henny Kruger, Professor Dempsey, Melinda de Wet, and Carl Anschultz. Now, if you have any questions and you don't want to come and speak to me, these people might be in your department closer to you. You're also welcome to speak to them should you have any queries. Now, in terms of service providers, you all have probably seen your Alexander Forbes benefit statements. Alexander Forbes administers the fund, and they provide us with consulting services as well as actuarial services. They, however, do not invest your money. Our investment managers do that for us, and you'll see we have quite a number of investment managers. We do not put all our eggs in one basket. We split them, and we grill them regularly at quarterly investment meetings. Okay. Here we have Investment Solutions. We also run on their platform. We have Allan Gray, we have Coronation, Sanlam, Investec, ABSA, as well as Old Mutual in terms of our guaranteed fund. So we do have various asset managers involved in the fund, and I'm pretty sure you'll recognize most of those names. In terms of our fund administration statistics, our pension fund currently has over 2,100 active participating members in the fund. It's grown quite a bit over the last year or so, and we hope to see those numbers increase. Our pension fund, or defined benefit pension fund, currently has 180 odd active contributing members. Now, this is a closed fund, so we will see our number of active members there decrease over the years, and we are seeing our pensioner base increasing, and we currently have 272 active pensioners. In terms of the fund's statutory valuation reports, now these are reports that we have to present to the Financial Services Board every 3 years. In these reports, the actuary has to determine whether or not the fund can fund all its liabilities. So if you're a pensioner and you're retiring in 20 years' time and you're a member of the defined benefit fund, will the fund have enough money to pay you a monthly pension until you and your spouse has passed away one day? That's what the actuary has to ask himself. And the good news is all our funds are fully funded. For the defined contribution members, that means if you were to resign today or in 10 years' time, there's enough money to pay you your full fund credit at all times. So the fund is in a very healthy financial position, which is very important. Now, in terms of fund benefits, I very often get the question, what will happen if I pass away? What benefits do I get, etc., etc.? We have redesigned your benefit statements to show you exactly that. Now, if you look at your new benefit statements, just to give you an example, this is what it will look like. Before you can open your benefit statement, you will receive an additional email from us with a PIN and password, because you will get this email directly to your inbox. You'll have to enter your PIN and password, and this is roughly what it'll look like. All the information that was in your previous benefit statements will also reflect on this benefit statement, but we've just tried to make it a bit easier for you. For example, what is the value of my fund? Now, if I were to resign as at 31 December, what would I get paid? You click on the little button and it shows you what your value would have been. Just in case anybody was wondering, we don't have a Spider-Man floating around. There is no Peter Parker working at the university. Okay. More importantly, what do your beneficiaries get should I pass away? You click on the button and that's the benefit that will be paid out to your beneficiaries. When I talk about beneficiaries, the trustees of the fund has the obligation to determine who to pay your death benefits to. That's why we ask you to complete nomination of beneficiary forms. We do not know each one of you personally. So if I have somebody sitting in my office coming to claim a portion of your benefit, we need to determine whether they're telling the truth or not. So if you've put that person on your nomination form, it's much easier for us because you've already told us that that person is a beneficiary and should get a portion of your pension fund money should you pass away. So on your nomination forms, please fill in all the details. You'll see there's a section for dependents and there's a section for nominated beneficiary. Now, a dependent is anybody that is financially dependent upon you or a legal dependent. A legal dependent would be all your children and your spouse. Person financially dependent upon you can be anyone. that you are providing monthly assistance to, whether that is paying mom and dad's electrical account every month or paying your niece or nephew's school fees, whatever the relationship, that person is a financial dependent and can therefore claim a portion of your benefit. The problem that we have with financial dependence, for example, mom and dad, you, for example, give them R1,000 a month to go and buy groceries. Should something happen to you and they're not on your nomination form, they come and sit in my office and they say, but you were helping them financially every month. And I'd say, okay, please provide me with proof. So if you haven't paid it into their bank accounts but given them cash, what proof do they have? What proof can they give me? That's why it's important to make sure that those people are also included on your nomination form, please. It just really assists us when it comes to any investigations that we have to do on our side. And please, this is no excuse, please don't pass away. It really is important that you keep actively employed here. Your students need you. Okay. Your benefit statement will also, from this year on, include other benefits. Now, your other benefits, most of you would have seen the GLA deduction on your payslip if you've chosen to belong to the University of Johannesburg's group life assurance policy. That is separate benefits. It does not form part of the fund. But as members, I get a lot of queries wanting to know about those benefits. So we've actually included them on your benefit statement this year. So what if you've participated in the spouse's pension, you'll have a click here. If your spouse passes away, what benefit will be paid out? And once again, the amount will come up. Same thing from the group life policy. If you pass away, what will be paid out to your nominated beneficiaries? That amount will be popping up. Okay. So I hope you enjoy your new benefit statements, and I look forward to seeing you and discussing them with you in the future. Another change that's happened in terms of our fund benefits is in terms of our disability benefit. Now, you still have disability cover of 82.5% of your pensionable salary. Please note, whenever a fund person talks about salary, we're talking about your pensionable salary and not your full package. Your 82.5% disability benefit was funded from the Disability Reserve Fund. That fund has been closed down, but there was surplus in that fund. That surplus has been moved to what we call a cell captive policy with guard risk. So the policy is still in place and you still have your benefits intact. The good news is, because of the surplus that we've been able to move to this cell captive policy, you no longer have to pay monthly contributions or premiums for this disability cover. So, for defined contribution members, what does that mean? In the past, you used to have a deduction of 1.6% of your employer contribution, which went to the Disability Reserve Fund to fund your disability benefit. That 1.6% is now being added to your retirement funding. So you'll see a bigger amount going towards your retirement savings on a monthly basis. Okay, so that's the good news there. In terms of our new life stage model, I'm pretty sure the defined contribution members saw a lot of communication from me earlier this year about that change. What we've done is the old life stage model said that up to age 63, you were in a higher risk portfolio. We then, from your 53rd birthday, started to reduce the risk. When you're age 60, you're in the lowest risk portfolio until you retire at age 65. All our advisors said the process is too long, too complex, so we've simplified it. We've also changed it, the philosophy behind it, to give you a longer period and a higher risk portfolio, because a higher risk portfolio gives you higher returns over the long term and should give you more growth. Okay. So the new life stage means up to age 60, you're in the wealth creation portfolio. Then slowly we reduce the risk so that when you're age 64, you move into the low risk portfolio or the capital protection portfolio. Okay. We do believe it's a change for the better of our members to give them the higher risk or the higher growth options for as long as possible. And this is specifically meant for the members who do not want to manage their investments themselves. Because remember, you have the right to choose your portfolio. The investment switch form has been loaded on the intranet under pension and provident funds. You can choose your investment portfolio any time during the year. You can change it once a year without incurring costs. The minute you change it more than once a year, we will charge you an administration fee. The reason for that is not that we want extra money, but to help you focus your investment strategy so that it is a long-term investment decision that you make and not short-term decisions. Okay. In terms of our investment performance, the University of Johannesburg Defined Benefit Fund, the wealth creation portfolio over a 5-year period gave 11.02%. The others are on the board, and this is also emailed to you regularly. Please note that this is only the defined contribution section for defined benefit members. So that would be your medical reserves, your additional voluntary contributions, and all Annexure D members who have investment choice that are invested in this portfolio. Your actual defined benefit, it doesn't matter where it's invested because it's promised. You will get your promised benefit when you do retire. For the normal pension fund members, it's very important to keep track of your investments. As a rule, all investments have to exceed inflation. If you're not exceeding inflation, even with your personal investments, you are losing buying power. One of our risks these days, if you invest, for example, in a money market portfolio, is that you're losing buying power because the return that you're getting is not equal to inflation, and especially not your personal inflation rate. Our wealth creation portfolio over a 5-year period provided you with 14.7% investment returns. If we have an average of a 14% investment return every 5 to 6 years, it means roughly that you can expect your fund credit to double every 5 to 6 years. So it's important to monitor this. Your capital guarantee portfolios gave 11%. Your wealth preservation portfolio, which is a medium risk portfolio, gave 11.28%. So it's important to keep these in mind. Also important to note that when we talk about a high risk portfolio, please note we're not taking chances with your investments. They are still invested with good investment managers. It simply means that there are more shares in that portfolio compared to cash and bonds. A lower risk portfolio will have less shares and more cash and bonds. Okay. We do spread the risk by having more than one asset manager in each portfolio, and we have more than one asset class in each portfolio. So we will never put all your money in Sashel shares, for example. It is always split across various instruments. Okay. So even though we say it's a high risk portfolio, it's not like we're taking any chances whatsoever.
The University of Johannesburg. Rethink, reinvent.